Hey, so let's circle back on Tesla. It's been roughly a week since we checked in. When we did last check in, it was trading at 242. Now it's down to 215. So we'll look into if that's a good price point. But before we do, let's just go over the news. What's been going on with Tesla for the past week? And then we'll go into the technical analysis to see is 215 a good time to buy this one, or what is a good time to pick this one up? So, um, quite a bit of news here. Let's just jump into it. Number one, we have Tesla making cuts in China. This kind of reiterates their game plan to uh, cut prices in order to gain market share. So, shouldn't be too surprising to see something like this. But nevertheless, they said that they're going to cut prices in China on its Model Y long range and performance version that happened on August 14th. This marks the first time since January that Tesla reduced its vehicle prices in China and has turned to other incentives to boost sales in the face of rising competition in recent months. Evercore, this ISI analyst, said in a research note that he expects similar select price cuts in US and Europe, which could lead to about 100 basis points of sequential pressure on Tesla's third quarter margins. There was also price cuts in China on models S and X by about 6% last week. So yeah, I believe this guy hit it right on the head. With these price cuts, what's investors such as ourselves need to be aware of is if they're going to make these price cuts, there is obviously potential that revenues aren't going to meet analyst expectations for this upcoming quarter, and things will need to get revised down. Uh, and then, of course, it's just going to trickle down the line. If the revenues aren't as high because they had to cut prices to gain more market share, that means their gross margin's not going to be as high, operating margin's not going to be as high, and then ultimately the net income's going to be lower, earnings per share is going to be lower, and so uh, I'm not sure how long this will last, but that is kind of what we need to expect going forward, is especially for this upcoming quarter, which again we'll kind of touch on that towards the end of this, of what we're currently expecting and how that might need to change over time. Next, we also have Fisker. This is a EV startup. They said on Tuesday that they signed a deal with Tesla to adopt its North American charging standard, which is kind of the rage right now. Is Tesla has their charging system, and I believe the U.S. government came up with their one. I'm not sure exactly what the differences are, but it's essentially something like Tesla has a three-prong system. The government came out with a competitor with a two-prong system, but it just seems like Tesla has the wider reach in terms of charging, and so we're seeing another company, Fisker here, uh, joining that type of charging setup in order to gain access. So as this piece wraps up, it says giving Fisker customers access to the automaker supercharger network by 2025. Ford and GM are also moving away from the standard combined charging system in order to pivot into Teslas. Um, we also see the government is offering 7.5 billion in funding to speed the development of EV chargers in the US. Automakers have shielded away or shied away from building large charging networks as installing and maintaining chargers requires a substantial investment for still limited returns. Tesla's already made that type of jump, or at least the biggest jump of many other competitors or others that are in that industry. So they definitely are the front runner on this, and it's also very promising to see companies, whether it's Fisker, but even seeing those big names like Ford and GM, that's very positive for this. Not sure how that will impact the revenues down the road, but that's kind of the buzz, is how much will that impact revenue, especially as we continue to move towards a society that like solely drives EV, um, which of course will take time, probably a couple years, but something we will monitor. Uh, Tesla also launched cheaper models S and X in US. We kind of hinted at that earlier. So what they did is they launched cheaper variants of its S sedan and its X SUV with shorter driving ranges, looking to increase sales of high borrowing costs, hampering demand. It's an interesting strategy to see what they're doing here. Um, I'm not sure if we go into details in a later article, but essentially what they were able to do is if this Model S originally can do say 400 miles on a charge, they figured out a way that they can lower the range to like 300 and therefore bring down the price, and it shouldn't impact the gross margin all that much. But of course we'll actually see the results once we get there, but that's on paper how they're making it sound. So we'll of course see how that plays out over time. We also have this Chinese company called Cattle. They recently launched a fast charging battery. This mass production of the new batteries expected by the end of the year. Vehicles equipped with the battery will hit the market in the first quarter of 2024. Cattle, this Chinese company, counts Tesla as its biggest client. Um, so this one's new. I haven't heard this name before, but if if Tesla uses them as the battery in their car, uh, this sounds good to have a new battery, a faster one, faster charging at least. This is very promising, but we will see just how this all plays out. It looks like this is more of a towards the end of the year thing, probably next year thing. This might be the biggest piece of all the news in the past week is that Texas approved a plan to mandate Tesla tech for EV chargers in the state. So let's just read through it, and if I need to add anything, I will. So Texas on Wednesday approved this plan to require companies to include Tesla's technology in EV charging stations to be eligible for federal funds. So there is a decision by Texas, which is being closely watched by other states and is a step forward for Tesla CEO Elon Musk's plans to make its technology the U.S. charging standard. The company won a slew of projects in Pennsylvania's first round of funding, announced on Monday, but none last month in Ohio. And then, of course, the big news from a week or two ago that Ford and GM announced that they plan on adopting the Tesla North American charging standard. I'm sure this has to do with Tesla being located in Texas, their headquarters being located there, and so Texas kind of gave them the bump that, hey, we want this to be the standard. I'm not sure how much that had to play, but I'm sure it had something to do there. Um, Otherwise, yeah, I mean, this seems like, I guess it's not guaranteed, but if Texas is mandating that, hey, you need to use Tesla's charging uh, equipment, essentially, not necessarily that it needs to be made by Tesla, but it almost makes sense that most of this money is probably going to go towards Tesla, and it looks like this could be upwards of $5 billion. Again, I'm just going to assume that's probably majority going to go to Tesla and their expansion in that revenue area of charging. So essentially, all we'll be looking for down the road is Tesla making expansions in property in terms of charging, and then hopefully we see a counter to that. So Tesla might spend say $3 billion over the next year or two trying to expand their reach in that sector of charging, but they'll most likely get that money back. So it's almost like free expansion here. So overall, good news for Tesla there. We also have Core Lithium. This is one of the companies that Tesla works with. They received a notice from Tesla of a 2022 supply agreement that failed to materialize within a set deadline. I don't expect that to really evolve into anything major. It probably something in the details that just needs to be ironed out, but came across it, thought I'd just throw it out there. We also see that there was a document that kind of is alluding to a potential issue with supply chain where there's this document, a recent version of which was obtained by Reuters through a public records request, was updated to include batteries, tires, aluminum, and steel. And so uh, there's kind of issue with the U.S. and China having, uh, I guess, trades and being fair in one way or another. One of which that was impacting companies like Nvidia, where you can't send certain chips because they're too high quality, and we're kind of at a slight uh, disagreement with China. Well, here's something that could impact Tesla. It doesn't seem like it will, but there's certain industries that us in the United States we kind of frown upon, that China has apparently forced labor type camps, and apparently they gave a couple examples, like apparently tomatoes, and there was a couple industries that they gave examples of that they just won't trade with China on these because, and I don't think it's the full country. It's really just specific cities, counties within China that use that type of forced labor, that we just won't deal with them in those regions because of that. And so this is something that could impact Tesla. I don't think it will. Nothing's shown that it will. It's just it popped up on the radar that items that Tesla would use, such as batteries, tires, aluminum, steel, could be faced with some sort of forced labor issue. But again, nothing seems to be out of place. It's just, again, that was mentioned that it's going to be something that's going to be maybe a little more closely monitored, and it could raise a flag down the road. But again, too early to tell. Then a couple highlights here is Indonesia says Tesla plans to invest in a battery material facility in Indonesia. Didn't give any prices, but uh, that's down the road potentially. Probably not even this year, maybe next year. And then apparently there was a Tesla data breach affecting about 75,000 people. This violated the data security protocol and leaked the 75,000 individuals to a foreign media outlet. So, I mean, the way it read to me, it almost sounded like these people affected were Tesla employees, but maybe not. It seems like a relatively small number, but anytime you see something like this, it's quite alarming. Uh, but again, not that large of a data breach. It could have been millions, you know. So um, I don't know how big of an issue this will be, but it has the potential. Uh, of course, if something does come up, we will bring it up. Moving kind of a transition here into the technicals, we have just what the analysts are saying. So nothing really changed from last time we looked, which again wasn't that long ago. But these are the numbers that we're going to be looking for. Tesla doesn't have earnings till October, but kind of touched on this earlier that if they're going to keep cutting prices, that could definitely impact their estimate for revenue, or at least the analysts' estimate for revenue at about 24 to 25 billion. We will see. We will definitely see if Tesla can give us an update or what. But and then the last piece here is down at the bottom. We just have a little snippet of just what it looked like the last time we checked in. So again, we had Tesla at 242. We noted this slight uptrend since January to buy the dips on it, but also to be aware of decreasing profit margin in order to gain market share. So it could definitely lead to potential dips in this one. We also noted buy points at 219, but we were looking for 230, resistance at like 254, possibly 280s and beyond. So let's just take a look at what the chart looks like now. What's been going on? So here's this dip that we're talking about. It's almost playing out exactly how we would want it to in terms of that uptrend. So the uptrend is in purple, those upward lines. We're at the very bottom, and we're kind of reaching a spot that I marked as potential support at 215. There's not a crazy amount of support there, but going back to like mid 22, the price did come down to about 215, stalled out there, climbed back up. Ultimately, it ended up breaking down below that point, but in mid 2022, we have late 22, it kind of hung out there for about a month. Even going back to 2021, multiple points where it just kind of bounced around that line. So 215 seems like it's a solid number. Of course, over time, if we get bad headlines or a revised revenue report, which I'm kind of anticipating something like that happening, especially with the price cuts. Not sure if we'll get it, but I would like to see something like that. Um, but overall, it seems like the uptrend is intact, so we'll just keep playing it like that. But yeah, over time, I could definitely see if the price cuts continue, before their next earnings, which is still pretty far away, might break the uptrend slightly depending on the following results. But again, kind of far away. So at this point, made some changes here to the technical chart. Um, and so what I'm seeing at this time is currently it's about 215, and I have buy points marked at 215 and 186. So I'm planning on picking this up at this price. And if it pulls back to 186, that seems like it's um, a more consolidated low for this one. Yes, I realize even just recently, January was down in close to $100, but it almost seemed like that was like a reprieve or just a random break that um, I don't expect us to go that low, but yes, I'm aware that it could. But for right now, we're just going to play it as is. It's in a dip. It's at the bottom of the uptrend. Definitely some support at 215. So all around, it seems like now is a ideal time for this one to bounce higher. But again, that price cutting thing is definitely something we need to be aware of. We also have resistance at like 254, 298, and 298 kind of coincides with the top of the channel. So we'll see. Those are the resistance points for me. I'm interested in 254 at this point, just considering the fact that it kind of hovered there for a couple weeks. Definitely broke above that, keeping the uptrend intact, but then all of a sudden, very quickly breaking below 254. So if the uptrend continues, 254 shouldn't be an issue, but over the next maybe 2, 3, potentially a month, it might kind of hover in that range. So of course, we'll kind of see how it plays out, but overall, just here's how I'm seeing it. Currently 215, that is one of our buy points. It is in a dip, so I will pick that up. Resistance at maybe 254, and then 298 is top of the range. And then the note that we're leaving ourselves is that slight uptrend since January, still there. Buy dips, we're experiencing one right now. And then we're just going to be aware that decrease in profit margin for gaining market share with that potential to miss earnings and revenue expectations and less earnings per share. So we will, of course, we'll see. Still a while away, another probably 2 months away. But yeah, that pretty much wraps it up. So if you have any questions or want to share your opinion on this, by all means, feel free to share in the comments below. But otherwise, yeah, that's it. So please like, subscribe, and I'll see you on the next one. Bye.